Debit cards versus credit cards. Using a credit card is different from using a debit card, though it can feel similar. With a debit card, the funds are taken directly from your checking account. If you don't have the money to cover the expense, your card will be declined or you may be charged an overdraft fee. But with a credit card, you're taking out a small loan each time you buy something. Your card issuer pays the merchant, and then the issuer expects you'll pay the amount back. You'll get into financial trouble if you spend more than you can pay off each month, because you'll be charged interest on the amount you don't repay. The average annual percentage rate for credit cards, according to Federal Reserve figures, is 21.37% as of February 2025, so debt can add up fast. You're required to make a minimum payment each month, but if you just pay the minimum while you make more purchases, your balance will keep growing and you'll owe more and more. Why building credit is important. America doesn't only run on Dunkin', it also runs on credit. And making sure your credit profile is healthy and robust will simplify things for you in the long run. It'll be easier to buy or lease a car, get a mortgage, or even get an apartment depending on where you live. But knowing how to build your credit can be a little tricky, especially if you're starting from scratch. And if you're not careful, you can end up easily maxing out your first credit card. According to an April 2025 survey from U.S. News, 39% of consumers admitted to maxing out their first credit card, something I can relate to. That's why it is so important to set a dollar limit for yourself, one that you know you'll be able to pay off each month. If you carry a balance on your credit card, getting into debt isn't the only consequence you could face. You have to pay attention to your credit utilization ratio, which is the amount of credit you've used compared with the amount of credit you have available. If your ratio exceeds 30%, it can lower your score. Keep your ratio below 30%, or preferably below 10%, and you'll be on your way to a higher credit score. Your score is a shorthand way to tell lenders how much of a risk you are. A higher score means you have a history of paying bills on time and tapping credit carefully. A higher credit score also means big savings because you'll qualify for lower interest rates on financial products. Card number 1. The Secured Self Visa. Credit card. The Secured Self Visa. Credit card is a secured credit card that touts unusual features targeted to consumers struggling to build credit. For one, the card requires no credit check. And while the card calls for a security deposit of at least $100, you can use a self-credit builder loan to meet that requirement. You can also secure your card with a debit card or a linked bank account. The card has no minimum credit score requirement, and it reports to all three major credit bureaus, Equifax, Experian, and TransUnion. Cardholders pay a $0 annual fee and a 28.24% annual percentage rate. If you use a self-credit builder loan to secure the card, you will have to pay the loan's costs as well, and will have to make at least 3 months of on-time payments and meet other requirements to qualify. The card doesn't earn rewards or offer a 0% introductory rate on purchases or balance transfers. With no credit check and a high approval rate, the Secured Self Visa credit card is made for building credit. You can use it to access credit and build a positive credit history by making on-time payments and keeping your credit utilization low. Ideally, a balance of less than 30% of your credit limit. Your initial credit limit matches the security deposit you make when opening this card. You'll have to deposit at least $100, so you'll have at least a $100 credit limit. That's not much if you plan to use the card for everyday purchases. For example, by spending $30 on a card with a $100 credit limit, you'd reach 30% credit utilization. You could use this card to make small purchases and pay them off each month. If you'd like to use it for everyday purchases, you should make a larger security deposit to have more room to spend without exceeding 30% of your credit limit. Cardholders with limited access to cash can opt to secure the card with a self-credit builder loan. To qualify for the credit card, you must make at least 3 on-time payments toward your credit builder loan, have $100 or more in savings progress, and keep your account in good standing. Take note that these loans have their own costs. The card has a 28.24% APR, so you shouldn't carry a balance. Card number 2, Bank AmeriCard Secured Credit Card. The Bank AmeriCard secured credit card can help you establish or improve your credit with access to your FICO score for free each month. You can also link the card to a Bank of America deposit account for optional overdraft protection services. If you're looking to build your credit in this year. Card number 3, Capital One. Quicksilver Secured. Cash Rewards. Credit Card. You need to build or rebuild your credit. The Capital One. Quicksilver Secured Cash Rewards. Credit card can help you develop a more robust credit profile with responsible use. You will be able to gain experience with credit as you earn 1.5% cash back on every purchase every day and work toward a traditional unsecured card. You'll also earn 5% cash back on hotels and rental cars booked through Capital One Travel. You may be able to qualify for the Capital One Quicksilver Secured Cash Rewards credit card with a minimum deposit of $200. The card has a $0 annual fee and no foreign transaction fees but a fairly high annual percentage rate of 29.74%, variable. The Capital One Quicksilver Secured Cash Rewards. Credit card is designed for those looking to rebuild or establish credit. The card requires a minimum refundable deposit of $200, but keep in mind this deposit will set your credit limit. If you are looking for a credit limit higher than $200, you can make an initial deposit of up to $3,000 depending on your creditworthiness. When looking to rebuild or establish credit, the most important factors are making payments on time and keeping your credit utilization rate low. Try to avoid using the full amount of credit available to you and be sure to make your payments consistently, on time, to most effectively boost your credit score. Once your credit is high enough, you'll qualify for an unsecured card. The Capital One. Quicksilver Secured Cash Rewards. Credit card is a great choice for those looking to rebuild their credit. Earning any type of rewards with a secured card is an appealing offer, although it shouldn't be your main concern. You should be focused on rebuilding your credit to qualify for an unsecured card. Capital One will regularly report your card status to the 3 major credit bureaus. Every 6 months, cardholders are automatically considered for a higher credit line with no additional deposit necessary. Once your credit has improved through responsible card use, you can upgrade to an unsecured Capital One Quicksilver Cash Rewards credit card and receive your security deposit back. If you're looking for a secured card that'll earn you cash back in common spending categories, discover it. Secured credit card cardholders earn 2% cash back at gas stations and restaurants on up to $1,000 in combined purchases each quarter, automatically. Plus, earn unlimited 1% cash back on all other purchases. In addition to earning rewards with your secured card, card number 4. Capital One Platinum Secured Credit Card. The Capital One Platinum Secured Credit Card is designed to help you build your credit with responsible use. With a $0 annual fee, the card reports to all 3 credit bureaus and will automatically consider you for a credit line increase in as little as 6 months. To open a Capital One Platinum Secured Credit Card, you'll need to make a refundable minimum security deposit of $49, $99, or $200 online or by phone. You can pay your security deposit in a single payment or in installments over a 35-day period, but your account won't officially open until the minimum is met. The security deposit serves as collateral for the account. It will not earn interest or be applied toward your monthly payments. Cardholders can choose their monthly due date, set up alerts via email or text, and use autopay to help them stay on top of payments. The card also has zero fraud liability to protect you against unauthorized charges. To help secure your account further, you can use virtual card numbers, which let you pay for online purchases without revealing your real card number. When you're using a secured card like the Capital One Platinum Secured Credit Card to build or rebuild credit, you'll want to pay attention to 2 main things: paying on time and keeping your balance in check. These are the 2 most important factors impacting your credit score. For on-time payments, setting up automatic payments can guarantee that you'll never miss a due date. The other factor, credit utilization, which is how much available credit you use compared to your credit line, is a little more complex. The key is to avoid using a large percentage of your credit limit, which can be a challenge when your credit limit is low. The lower your credit utilization, the better it is for your score. Therefore, The best way to maximize this card is to use it only for small purchases and then pay it off in full. For a secured credit card, this one has favorable terms, such as charging a $0 annual fee and automatically reviewing your account for a credit line increase after 6 months. The lower minimum security deposit of $49 with the ability to pay by installments can also make the card appealing for eligible applicants. However, a few secured cards offer rewards and benefits, such as cashback. If those features are important to you, you might explore different products. But